So how's everybody's trading going this week? Everybody, if you're green, put a 1. If you're red, put a 2. If you're anything else, put a 3. Da Vinci, what's going on? I'm sorry, someone's name is in in a different language, so I'm not able to understand what that says, but they have the loan tag. So what's up, loan? I'm just going to say that. I've seen you in the other chat, but like I said, I don't know your name, so apologies. 3 for cooked. Aye. Yeah, this market's been really, really interesting. So, really, really interesting. Hey, so Nate, when you've hit record, just let me know, man, and then I'll get started.
Oh, we're going.
Oh, sweet. Okay, perfect. Let's rock and roll. So, yeah, I put a deck together for everybody. I think what I wanted to really talk about today was a bunch of different concepts that make up my trading day, like things I look at. Um, Now I know we all study ICT, and obviously we're inside Ash Cap, so we study the crap out of Matt Ash, right? With the unicorn model. My foundation, I will say, is based off of everything I've learned off of Ash. Um, if I call him Ash or Matt, it's the same person. I'm just so used to calling him Matt, but I figure maybe people don't know that, so I'm calling him Ash. But I'm just going to call him Ash just for the sake of it. But yeah, I studied, off of Ash since last year, early last year, and just tried to understand, um, the unicorn model and the ICT concepts that are driven within that model. Now, I'll be honest, like ICT is a very, very tricky thing when you're starting out. Like, there's so many different terms. There's just the concepts overlap. There's different mentorship years that, I mean, there's just stuff overlapping, information overlap. It could be even information overload. So for me, I started to utilize the 2022 mentorship before I found Ash. But when I found Ash, I started learning even more things about like hard time frame alignments. I started understanding about time. I started to understand what SMT was, and also just trading like prop firms, like future prop firms. Like that was all new to me. I had no idea, things like that really existed. So there was a lot to learn there, and I think over time, what's happened is once I started laying the foundation. Um, and start to understand more about the mindset, right? This is a big thing that Ash has. I think that a lot of other traders don't, well, maybe they have it, but they just don't talk about it much. But Ash talks a lot about psychology and mindset. And I can't tell you, I had no clue how high the bar was set in terms of the psychology and mindset piece when I joined UU, because it was just like not even on my radar. I was coming from a crypto world, so I'm like, borderline degen. Um, just going crazy. And I think when I found Ash, he started to kind of put things together for me, and I started understanding what it takes to be a successful trader. Because we're all working towards becoming successful. Now, success is defined very differently from one person to the next. But if I just put it at the root of it, a successful trader is someone who's profitable month over month, right? Now, there's obviously characteristics and attributes that go to what makes that person successful, and it's going to differ because we're all going to do things a little differently. But today, we're going to just talk about some more technical things. And if you have questions, feel free to drop it in the chat. Nate's obviously here, so he's also going to chime in. And I really appreciate everyone's time today. I know it's Friday at 1 p.m., and not sure where everyone is located in the world. So I don't know what time it is for you, but for us in the Eastern Standard Time, it's 1 p.m. and it's the afternoon. Okay, so the agenda for today, we're going to talk about time. We're going to talk about hard time frame POIs. We're going to talk about something called SSMT and what it is and what the difference is between that and SMT. And then we're also going to talk about some key signatures. So these are things that I look for on the lower time frame. And like I said, my foundation is rooted in the unicorn model. So a lot of the things that I use, like these key signatures, are rooted from the unicorn, but I don't specifically trade the unicorn. So I just want to put that out there, okay? I've kind of taken the road of being an independent trader, independent thinking trader. But like I said, my foundation is rooted in the unicorn. So time, when do we trade? When do we not trade? We think that just because the market's open 24/7, that we should be in the market. Well, I shouldn't say 24/7. I'm thinking crypto. The market's open, let's just say, 8 hours a day type thing. Say New York session, there's also London session, and then there's also Asia session. Is it wise to trade every single session? Probably not. However, based off where you live, that might dictate what's easier for you to trade, right? If you're someone that lives in England, for example, it might be way easier for you to trade in the London session, maybe a bit of the New York session. If you're someone that lives, there was someone I was talking to, I won't name names, but they live in Sweden, and there's a 6 to 8 hour time difference, and that can have a huge impact on what session to trade. So in terms of time, you have to figure out what session works best for you, right? What makes your life easier. You don't want to be trading and it creates, stress. It creates unnecessary disturbances in your life, things like that. So figure that part out. And if you're someone that lives in the Eastern time zone, like trying to trade New York AM, New York PM, Asia session, I've tried to do that. I've even stayed up for London session and thought, oh, you know what, let me give London session a go. And to be honest with you, it's not worth it because I didn't want to lose sleep. Like I was losing sleep. And it's not good. Take care, Luke. Peace out, man. So um, figure that piece out for yourself, however that looks like. Okay, there's no right or wrong. It's just if you're gonna trade a specific session, then like dedicate yourself to that session, because that session, whether it's Asia, London, or New York, will operate very differently. We've often heard, with the market maker model and PO3 and things like that, that usually Asia is accumulation, right, and London has more of the manipulation move, and then New York will have that distribution, right? So you can already tell there's 3 different modes of operation that's potentially captured within each of those kill zones or those sessions. So once you figure that piece out, you'll often hear Matt talk about red folders, and I'm no stranger to red folders. I've gone kind of back and forth with these things where I've traded throughout them. I've traded after them. I've not traded at all. And I've seen some people trade, like literally trade the red folder. So there's no right or wrong way to go about this. I think it just depends on your system and like what works for you. However, for me, because I've tried all of it, I'll gladly share and say, when it comes to red folders, my goal is to trade after the red folder. So if there's a red folder at 8:30, that's perfect because I won't start trading until 9:30. So that's already passed. However, there are those red folders that are kickstarting at 10. And for me, I will usually just wait because I don't want to have something happen that I have no control over with creating volatility, right? There could be a liquidity injection, and then next thing you know, my A plus setup goes stop loss. So I highly recommend to observe red folders and how it works with your system. Now, there's situations like bank holidays, right? CPI, NFP, and FOMC. These are highly manipulative red folder events. And typically, from what I've seen, most traders they stay away. Now, I used to just actively trade everything under the sun. I didn't care if it was CPI or NFP or FOMC. I would even go and trade bank holidays, to be honest with you. And this is not even that long ago. And what I learned when I started reviewing my journal month over month was that I actually would have had a higher hit, like win rate, had I just avoided those days. Because it only takes one of those days to go against you, and it can screw up your entire month. And that's what happened to me. So moving forward, these are the types of days where I personally don't want to trade. Now, I know Ash has a Wednesday to Friday NFP protocol. However, this week with the government shutdown in the States, there's no NFP. So, trade every single day. But I can highly see that things like CPI and FOMC, what happens leading up to that is just strict consolidation anyways. So do you really want to just trade inside consolidation? Because everyone's waiting for the liquidity, right? This is where it's better to just take time off, rest your mindset, do something else with your life, or maybe you're studying. If you're still new, maybe you're still studying, but take that time to do something different. Don't risk your funded stuff over these types of red folder events. And you also notice I wrote something called quarterly theory, manipulation windows. So I'm going to explain what this is. What I do with quarterly theory and manipulation windows is, actually, let me go back here. Okay, so what I do is, I'm going to show you this. So on my chart, you'll notice at the very bottom here, I have an indicator called the day quarterly theory indicator. I'm just going to wait for this thing to load up. Not sure why it's not loading up. That's weird. Let's try resetting it. Okay, there we go. So you'll notice I have the day quarterly theory indicator at the bottom of my screen. This is a free indicator. And when I started doing, studying off other traders, and I started learning about quarterly theory, I started understanding, especially when I started moving to the 1 minute time frame, that there's specific time macros where I could utilize to figure out where the manipulation is occurring. So right here, I mentioned quarterly theory manipulation windows. So for me, time-wise, I'm always looking for a manipulation move to fall in between this red box here and this green box here. So this is quarter 2 and micro quarter 3, okay? Each box represents roughly 22 minutes or so. That's 23 minutes. 22 minutes. 23 minutes. And this should probably be 22 minutes. Oops. So the reason I'm showing this to you is just so you understand how the 90-minute cycle itself, which is at the bottom here, is broken down. So what I'm looking to do is I'm using these as like time macros to trade. So prior to using quarterly theory, I was literally just waiting for alerts to fire off on levels, right? Which is probably what most of us do. I took it one step further and started studying about macros. Now we've seen with ICT and even with other traders, they discuss utilizing macros, right? So they will trade within those specific time windows. That's when they want to see things happen. So I'm doing something similar to that, except I'm using quarterly theory now to gauge that move. So if I am considering that I'm going to start trading at 9:30, right, which is when the New York session open begins, what that means is I'm looking for a manipulation move to occur between 9:30 and 10:08. So I need that factor to play in to consideration. So you can already see here, and I will also say, like, when we look at the open, it's nothing new that there's manipulation at the open. We already know that that's going to happen, right? But what happens in the next window? Because in between micro quarter 4 and micro quarter 1, we can see that there's distribution going on, right? So if you understand anything about quarterly theory is running on the basis of accumulation, manipulation, and distribution, right? And there's other technical factors involved with it, but I'm not going to fully get into any of that stuff because that's not exactly what I'm using it for. I'm specifically using it to tell me when to look for trades. It's not to say I will only take a trade inside here. It means that I'm looking for a specific thing to happen, which is the manipulation on the lower time frame, reaching those higher time frame POIs inside of these windows. So if I'm only trading 9:30 to 12, which is what most people do, right? What that means for me is the manipulation that I'm looking for needs to occur in either this window here or the next window right here, which is 10:53 to 11:38. So I have two windows of opportunity where I want to see manipulation occur. Now you can see at 10:08 roughly, right about here, you can see there was a manipulation move, right? So something like this is exactly what I'm talking about, right? Where we have manipulation occurring inside of that window. Now, how has this benefited me? Well, what it's done is it's created a filter. Now, we talked about time, right? The whole reason of time is to understand when to trade and when not to trade. What this does is it now gives me a filter of when I need to be active and when I don't need to be active, right? How many times have you been sitting at your chart and then you have to use the washroom or someone knocks on your door and then you come back and you've missed a trade? It's happened to me. I'm sure it's happened to other people too. But having this type of a window for myself has now allowed me to know when I can just get up off my computer and do something else because I have 45 minutes in between where I know I'm not trading. And that's just a filter. Now, can price manipulate outside of these windows? 100% it can. And today it actually did. I believe it did. Um, like right here, for example, right? We're looking at NQ just past 12 and it manipulated inside of quarter four and micro quarter one. So this can happen, of course. But the whole thing is that you need to separate the idea that you have to be in every single trade. I come from a crypto world where we want to be on every single trade. There's so many freaking altcoins that you just want to trade them all, right? Because the setups look so good. But when I came to futures, I realized you don't have to trade everything. You can miss trades. It's okay to miss trades. I learned this from Ash. I couldn't understand it, to be honest with you. But then I saw the weekly RR. I started then seeing the monthly payouts. You start studying people long enough and you start seeing what they're doing, especially those that are selling things, right? You obviously want to make sure that they're, profitable. And obviously Ash is one of those people, which is why I'm following him. But I learned that from him was I don't need to be in the market all the time. I don't need to be in every single trade. It's okay to miss a trade. Is it okay to not study live price action? I think it's not okay to do that. If you truly care about this thing and you have the time and the commitment, put in the time and effort to sit with and study live price action. But it doesn't mean you have to be in the trade. That is a very, very hard thing to separate in doing because we have FOMO. We see people online sharing insane RR or insane payouts. Like Lanto just showed he had 1.5 million dollars or over $1 million in 2 days, full porting a live accounts. So seeing things like that, while of course that's amazing, and like you can learn from a guy like Lanto, um, the question you have to ask yourself is like, are you Lanto? The answer to that is no, you're not Lanto. You are yourself. So you can't let those types of things interfere with your process because you're not where he is in his process. You are where you are in your process. So it's so important to understand where you are in that process and realize like you are not these other traders that you are either studying from or following on social media. And what works for them might not work for you. And even what works for them that you are using to help work for yourself may not look the same because there's decision making and other processes involved that can never be replicated. And this is why you need to study live price action. You need to figure out what the filters are to keep you out of trades. A lot of times we think to ourselves, how do I get into a trade, right? You show up every day saying to yourself, and I know I did this, where it's like I show up every day looking to take a trade. And I started realizing after studying The Best Loser Wins that I should actually be showing up to the trade, but with the anticipation of not trading. I need to find ways and reasons to not be in a trade, right? Because the best offense is a good defense. So if I have a checklist that I'm using, which I do, and I'm checking everything off the checklist, and to me, if everything's checked off, obviously that's A plus, then I'm a go. But if there's one thing missing from that checklist, I'm not taking the trade. And that's the difference, is working through those urges to not take the trade, even if it goes in the direction you want it to go. And that happened to me today with GC, and I'm going to show you that in a sec. Okay, so that's how I utilize the quarterly theory manipulation windows. Let's talk about higher time frame POIs. Now, we often hear, people discuss lots of different levels, right? We talk about bias, right? What's your daily bias? What's your daily bias? I hear a lot of people talk about that, and that's a key part to Ash's model. That's a key part to a lot of successful traders' models, right? I'll be honest with you. I don't actually use daily bias. I only use these levels. That's it. Now, I trade utilizing executing on the 1 minute. So I am referencing the 15 minute. I am referencing the H4, but I also reference the H1. And I'm going to show you how I do this, okay? And how I show up every day to the market and what I do. And hopefully this helps you, because the whole thing about this was I was trying to find a way to make a routine for myself, right? So when I show up to the market every single day, what is like the common factor of what I'm doing? So I'm just going to hit the replay button to the top of the New York session and show you what I'm talking about. So when I show up to the market every single day, the first thing I look to do is I look to see where midnight is, and I look to see where 7:30 a.m. open is, okay? So I don't use a daily bias. The way I use bias is I utilize these two points of time and create them into levels. So we have midnight open and we have 7:30 a.m. level open. If price is typically above both of these, 7:30 a.m. Okay, I'm utilizing this through the ICT kill zones and pivots. I'll just show you guys what my. So right here, under opening prices, I've just manually put these in. Right, this is not like default. You have to like I had to manually kind of adjust some of this stuff, but I'm basically using midnight and 7:30 levels, and they put these levels here in the sand for me. So what I'm doing is, if price is above midnight and 7:30, I'm looking for shorts. If price is below midnight and 7:30, I'm ideally looking for longs. And this will typically work with premium and discount, right? And the wider the distance between midnight and 7:30, what that does is it pushes me to only trading the extremes, right? So this is like a filtering process to help keep me out of trades that I might typically have, traded in the past and then hit stop loss, right? So anything in between that zone, it's a no trade zone for me. And once again, the wider these two are apart from each other, all that's doing is it's forcing me now to trade extremes of the range. So that's the first thing I do, is I look on the 1 minute time frame and I observe where those levels are. So now in my mind, I already know, okay, we're below midnight and 7:30. I'm looking for longs. Earlier today in the chat, when we were all kind of getting in for New York session, I shared an NQ chart with a couple of levels that I was looking to take longs from. Didn't mention anything about bias, but just observe what was happening. And when I go to the 4 hour, this is the next part. I'm going to go to the 4 hour time frame, and I'm literally just going to mark the 4 hour levels that are in play, because I know price is below those levels, so I know I'm only going to be focusing on longs right now. So all I'm going to do is focus on key 4 hour levels to start. There's a level here. I'm going to mark it off, H4. There's another level down here. I'm going to mark that off, H4. And that's it. 2 levels. Now you're probably thinking, what about IFEGs? Aren't you using IFEGs? And the reason I'm not using IFEGs is because my problem with IFEGs is that it's a range. And anything can happen inside that range. Now, it's not to say I don't observe it, but I'm not using it to dictate if I'm going to take that trade or not based off of it. I would rather use an ERL because I know this is a very clear liquidity point, right? And I'm a reversal trader, so I'm looking to trade extremes of ranges and catching reversals. So if you're someone like me, I would think you're probably doing the same thing. So I mark off the H4 levels to start, then I move to the hourly. And the reason I'm moving to the hourly is because I'm trying to see if there are other levels in play that the H4 isn't picking up. So right here is a key level. There's an H1 ERL right here, and I'm just going to mark that off. H1 ERL. And I'm just going to look to the left to see if there's anything more. Oh, Dark Web says no voice.
No, it should
We
be
good?
fine.
Okay, cool.
I can hear you.
Perfect. Dark Web, maybe try logging off, logging back in, like disconnecting and then reconnecting. Might work. Okay, so if I look to the left, I don't see any other ERLs that are of interest. Now, you might look at this and say, well, this is a swing point, right? But I'm looking for institutional swing highs and lows, right? That should be created at least with two candles, not one candle, right? So if I look at this right here, right? This is showing, obviously, well, in this case, it is showing a swing high and a low. It's two candles, but per my judgment, I would prefer to use this. So maybe I should mark this down as an H1 now that I looked at it more closely because it does fit the bill. Two candlesticks. Is it the most ideal swing point? Probably not, but I'm not going to lie. I've seen many times where trades have respected a two candle swing high and low. Yeah, F1, this is being recorded, but. Oh, and quick shout out to Micah, or is it Mika? Hope I'm pronouncing this correctly. I noticed a while ago he had been given his own, I guess I'll say, channel inside the public Discord, and he's documenting his journey. Mika, my apologies. I always want to try to say people's names right. But yeah, congrats to Mika because he's got his own channel, and it takes a lot of courage, I think, to put yourself out there. Even like I'm not selling anything to anybody, and I'm at a point where I'm okay with putting out things that I know and trades I take maybe. So credit to Mika and to anyone else who's sharing things, right? I think also Mika talked about quitting his job too, so that's amazing. Congrats to you, man, and big up. So happy to see you here, man, and thanks for everything you're doing inside AshCap. I'm sure I speak for Nate and Ash when I say that specifically out loud right now. So big ups. I know you're helping a lot of people, and that's the thing with this journey is it's a lonely one. So we all got to try to help each other as best as we can, and lift everyone up because we're all in different places. But community is very, very important, and I'm happy I found AshCap because the community is absolutely fantastic. There's so many amazing people. There's so many amazing traders too, and I know some people don't even share much, but I know they're amazing because I've seen specific shares that they'll make, and it's like I'll study what the chart says of what they're doing, and I'm like, wow, that's a pretty solid trade that they took. It's not the trade I would have taken, but it's like that person took that trade. And I think someone did that this morning. They said they were out. They had taken 3 trades or something like that, and they were out with +3, and it wasn't even 10 o'clock in the morning. And I was like, holy shit, that's amazing, right? I can only feel happiness for people who are in that position. Okay, so back to the levels. So we have 2 H1 levels here. My next step is to go to the 15-minute. Now, why am I going to the 15-minute? The 15-minute is where I'm going to start to look at other levels of interest. Okay, so what are those other levels of interest? Those other levels of interest are right here on the right. London session highs and lows, Asia session high and low, previous daily high, previous daily low, previous weekly high, previous weekly low. And now this might sound like basic to a lot of people, but I can assure you if you just snap these on your chart and start observing them, you're going to start seeing how well price actually reacts to this. So I know that there's a previous weekly high up here. I'm going to mark that off. Even though I'm looking for longs, I'm still going to mark it off. I know session high right here, which is this red line right here. I'm going to mark that off. Okay, London high. Now, you'll see Asia high has already been tagged, and Asia low has already been tagged, right? So I'm not going to mark those levels. Previous daily low right here has also been tagged, so I'm not going to mark that off as well. Let me just make this a little bit bigger, right? So previous daily lows right here, but it's already been mitigated, so I'm not going to worry about that level. So really, there's only a few levels to consider, and that's everything to the downside, right? If price is going to continue to be moving in a bearish way, and as a reversal trader, I'm going to be looking to take a long off of those levels. So if I go to the 1 minute now, and I observe what happens next, let's hit this. Okay, so there we go. This is the window of opportunity right here. So I would be looking for something like this. So what this means now, by having levels, I can set alerts on these levels, and right, I can set an alert like this. Oh, it is replay mode, so I can't, but this is where you would have set an alert. You just set an alert. That's all you got to do. And then you just wait. I find a lot of traders have a hard time waiting for levels to get tagged, but this is one of the easiest ways to trade is align your higher time frame levels. Make sure those levels are obvious. Like you should, I think Dodgy said this, where if you stand like 20 feet away from your monitor, if you can see that there's a clear ERL, like then that's the ERL you should be using, right? If you can't see it, you probably shouldn't be using it, right? You want to use levels that have a lot of significance, right? And those usually come off the higher time frame. So here we have higher time frame points of interest to work with. So I'm going to hit play, and we'll see what happens with price. Now I know it's in replay mode, but I just wanted to show you what I'm talking about, okay? So you can see H1 gets tagged and there's a reaction. That's the whole point of what I'm trying to show you is I just want to show you that these levels will have reactions. What we do on the lower time frame is understand how to execute off these levels. And if our system isn't fully engaged, like the criteria is not fully met, then you just don't trade, right? But you have to wait for key levels to get taken out. Sometimes price will front run these. And it's up to you to decide now, are you going to have FOMO and jump in, or are you going to stick by your rules and just stay out until that criteria is met? If you can do that, that is a huge achievement in my opinion, because as traders, we face the urges of like wanting to jump in because we're like, I've been sitting here for so long, waiting, and now it's finally come and it's so close. And we see other traders who often front run these levels and they show that they're successful, and that doesn't help us. It's not helping anyone, right? Yeah, they're successful, they got 2R of it, that's amazing, great job, like great job, congratulations. But if I were to try to do that, guess what? I'm gonna hit a fucking stop loss, and I'm gonna be so pissed. I'm gonna like wipe everything off my desk because I know I broke my rule. I apologize for my language. I'm Canadian and I do like to swear, so I apologize. um so yeah, H1 level gets tagged and it's inside of that window. Dylan says, that was my biggest change, or probably challenge, in becoming profitable and not being subject to FOMO, or biggest change maybe. Yeah, but you're only going to like work through that by showing up for live price action. You're not going to experience that type of emotion if you're backtesting. And I'm not saying there's anything wrong with backtesting because I've done my share of backtesting, but what I'm saying is that emotion that I'm talking about, you're not going to experience it unless you're like studying live price action. And that is insanely important to understand and to overcome. Okay, so we talked about the levels. Let's talk about SSMT versus SMT, okay? So this connects now to what I'm talking about down here. So this is how I utilize SMT and how I utilize SSMT. So as we know, SMT is when we have, you'll notice I have these assets on the side here. SMT Let me see if I can find one. So it wasn't much to work with today. Okay, let me go back here. So SMT, when there's a Kraken correlation between two assets that typically move in unison, right? So we know, NQ and ES or NQ and YM, right? As an example. So this can take place on the aligned higher time frame, or it can take place on the lower time frame. So the example is, let's just use the example H1. NQ makes a higher high, ES makes a lower high. That is telling us that there's a Kraken correlation. Now, what I learned from Ash with SMT is if NQ is making a higher high and ES is making a lower high, and I'm looking to short, what that's telling us is that ES is the weaker asset. Now, what you do with that information is up to you, okay? But from a technical perspective, that's what I understand for it to mean. Now, do I trade based off of that? No, I do not. What I'm looking to do is just literally see if there is a Kraken correlation. That's all I care about. Because I technically don't trade ES, I only trade NQ. So if I see the higher high here, which is what I want to see, because I need to see at least, I need to see a sweep of a level, it'll typically be in this way. NQ making a higher high and ES making a lower high. Okay, now this is SMT. SSMT is the same thing, except the swing points are going to be anchored by quarterly theory. Now I showed you the micro quarters. I showed you the 90-minute quarters. So I'm anchoring my swing points with those quarters. Okay, so an example would be on the 1-minute time frame. Now I use lower time frame SMT or SSMT with NQ, GC, and CL. NQ makes a higher high, and YM makes a lower high between micro quarter 2 and micro quarter 1. So as an example, this would be micro quarter 2, and this would be micro quarter 1. So I'm literally looking for swing points to occur at those points of interest. Now, NQ, I think, had... Let me see if I can find it. So I think something did set up today. I did take a loss on it. I took a chance. I think, let me just double check the timestamp. Yeah, so it would have been the morning session. So here's a great example. So this is the loss I took from today. So what you're seeing here is I'm looking for manipulation to occur inside of the quarter 2 and quarter 3, micro quarter 2, micro quarter 3, okay? I'm now looking for SSMT to fall anchored between these two quarters. So I can see right here that there is a swing point here and a swing point there. So while NQ is making a lower low, YM is making a higher low, right? And it's anchored between micro quarter 3 and micro quarter 2. That's all SSMT is, okay? So the reason I use it is because it really helps me weed out noise and understand which points or anchor points hold more value than others. Because often when I was learning about SMT, I didn't know which one to, which anchor, which swing points to use. And of course, if you're learning, you're going to probably use the wrong one. So this is my swing point, right? This was my SSMT, okay? And that's how I use quarterly theory to understand SSMT versus SMT. What indicator gives you the overlay of the correlated asset? Okay, let's talk about this. It's really, really easy. So it's something called comparing or adding an asset or a symbol. So if you go to the top left of your screen, there's a plus symbol. I'm going to walk you guys through how I do this. It's really, really simple. So let me get rid of YM. Let's say I want to add YM to my chart. So I hit the plus symbol. I'm going to hit YM. Okay. I'm going to go to the YM, one exclamation mark. I'm going to click New Price Scale. What that's going to do now is populate that YM line chart onto my chart, and it's going to put the scale to the left. Now, what I want to do, because it's my preference, is I like to have my scales on the right, and I don't obviously want to use a line chart. I want to use a candlestick chart. So what I'm going to do now is I'm going to right-click in this case, it's the green line, the YM line chart, And I'm going to go down to pin to scale, now Z, and I'm going to select pin to new right scale. So now you'll notice it's moved it to the right side. Perfect. So step 2 is done. We've added the assets. Step 1, step 2 is I move the scale over. Step 3, right click again, or you can double click, and you just basically want to go to style. And this is where I'm going to change my aesthetics. So I'm going to change the line to candles. So now you'll see it's just like stock candles. But what I like to do is use like a monotone. So I like to use the second color from the left, which is, I guess, gray right here. And I'm just going to gray everything out. Okay, so that's my next step. And then the final step is I'm just going to go back to the body excuse me, the body colors, and I'm going to adjust the opacity to 50%, just on those two, just like that. And now you'll notice it looks exactly like what I had. And if you go to the right side of the chart and just adjust the scale, now I'm able to actually move it and adjust the size. Now, the reason I like to have the symbol or the fractal laid over my chart is because I don't like using split screen to find SMT or SSMT. I don't like using separate monitors to find it. I like to just see it right over laid one another, because now I can literally see those points of interest right away. So it's a little hack. We used to do this with crypto, not so much for finding correlation or a cracking correlation, but more for trying to understand fractal points of interest, and with Bitcoin, and seeing if Bitcoin is doing something that other coins are not doing, and maybe other coins are going to follow that. It's just fractal analysis. But I've utilized it now in this format to help me with being more efficient, right? And that's the thing too with trading, is we got to find ways to be more efficient in how we do things. Okay. So for me, this is something that's efficient. It might work for you, it might not. If something already works for you with the split screen, or like the side, or like two separate monitors type thing, then I mean, don't change what works, right? But for me, this has helped me tremendously, and it helps me to, because I'm trading on the 1 minute time frame. Things are happening really, really fast. This helps me to keep moving with the speed of the chart, and not have to second guess myself, right? Because I am looking at a bunch of assets. I'm not just looking at NQ when I trade. Okay, so this is a great example of SSMT. If anyone has any questions, drop it in the chat. Just gonna take a sip of water. Okay, next thing to talk about is the correlated assets. So with NQ, I personally use ES and YM. YM can be a little wonky. Sometimes when we're looking at YM, price points won't actually line up properly, but I find like in this situation, it lined up perfectly, right? So I'll use it. ES is no different. I mean, it's more correlated than YM, but sometimes ES is doing things that NQ is just not doing, and that's okay. GC, I like to use SI, so that's silver. With CL, which is oil, I like to use RB, which is gas. And when I was actually, I didn't know about HO. HO is what is it, hot oil or something like that. I didn't even know HO was even a thing until I was using the T-Trades fractal indicator, and I was just testing out the SMT feature, and I noticed it said HO is CL, and I was like, what the hell is HO? And sure enough, HO is a big deal. So I got HO and RB for CL. And then also, you'll notice I have 6E here. I've started to look at 6E a little bit more closely again. 6E is the Euro futures. Now, you might say, or you might ask, like, why am I not using 6B, which is the GBP futures? And the reason being is the volume is just absolutely garbage. So what I'm doing is I'm just using the FX pair. It's pretty accurate, so GBP USD, and I find it's been doing a great job for me. And I'll show you what I mean. So here's 6E. So the way I utilize GBP USD is I like to use, because it's Forex, it's a little different. I know I'm trading the futures, but it is, rooted off of, yeah, exactly, Mika. It's like, it's so blocky, man. It's really bad. Um, but what I do is instead of using SSMT on the 1 minute time frame, like I showed you how I do with NQ and what I would have done with GC and CL, I actually utilized 15-minute SMT. So I'm not actually using SSMT when it comes to GC, or sorry, to 6E. I'm using 15-minute SMT. And I'm just looking for swing points like this, right? Very, very obvious levels where we see discrepancy or crack in correlation, right? So if I go back to, let's go back to yesterday. And also, the time differentiates too, right, with the open, because with 6E, I believe it's like not 8 or 9 a.m. with the Forex pair openings. So it is different. But let me see if I can find something. I thought there was something yesterday. Maybe I missed it. Where was it? I thought it was yesterday. Maybe I'm mistaken. But anyways, I use it on the 50-minute, but everything else is pretty much the same. But yeah, that's the correlated asset. So key signatures. Okay, so this is now where we're going to get into some real, like there's 19 people in here, and whoever left is missing this. I wish they would have stayed, because this is basically, in my opinion, probably the most important part now, because it's easy to, mark off an ERL. It's very, very difficult to know how to trade off that ERL. So I appreciate you for sticking around. I hope this resonates with you. Let me just quickly read the chat here. If I'm not mistaken, you said you don't trade unless everything on your checklist is checked off. Is SSMT or SMT on the checklist, or do you take trades with no SMT as well? So for me, I have to have SSMT, okay? I have to. Now, I'm going to show you an example which happened today where there was no SSMT, and it was the only thing that kept me out of the trade, but a lot of the other triggers that I use were visible. And I stayed on the sidelines, and then I watched price absolutely roar. I'm talking about gold. So it's a bit gut-wrenching to see things like this happen, but that's trading, right? You're not going to get them all. And the reason you have rules is because when you've studied with your back testing or your forward testing in your journals, you, like for me, I'll just share my own experience. What I learned was over time, more losses will be accrued if I don't use SSMT versus if I like didn't use it. So that's why I just stick to not like if it's not on the list, I don't take the trade. Okay, so triggers, higher time frame POI, SSMT, a liquidity sweep, which is also known as turtle soup. I feel so weird every time I say that, like to somebody, like, "Oh, I'm looking for a turtle soup." It just feels so weird. I just like to use liquidity sweep now. I hate saying turtle soup, to be honest with you. Um, Maybe it's just me. I don't know. Change in state of delivery, which is also literally just an order block, right? Yeah, exactly, Mika. Breaker blocks, right? I like to identify them. I won't exactly use them to trade, but the change in state of delivery is the common denominator with the unicorn. So I just focus on the change in state of delivery. You'll notice Ash had put out a video a little while ago discussing, I forgot how he framed it, but if it was like a high value CISD or something like that. And basically the whole point of it was that the displacement candle through the change in state delivery had the FVG, right? And as we know, if a breaker block has an FVG through it when it displaces, that's technically the unicorn, right? So he was, we obviously know Ash trades the unicorn, but he was explaining the change state delivery in more of a higher probability context. So I'm very, very mindful because, like I told you, the foundation to a lot of what I do is the unicorn. The elements are there, right? Like higher time frame POI. I look for liquidity sweep. There's a change state delivery, right? These are all key components to how Ash trades the unicorn. Now, of course, there's other parts to how he trades it, but if you look at the key signatures on the lower time frame, that's about it. Time. New York AM kill zone 9:30 to 12. New York PM kill zone 12 to 4, and the quarterly theory micro Q2 and Q3. Right. So these are time frame alignments that I have adhered to in the past. Um, Moving forward, 9:30 to 12 is it for me now. So there's two windows of opportunity with the Q2, Q3, which I showed. If a trade forms inside one of those two, I take it. If it forms outside of it, I typically won't. With my funded accounts, I will do it with my challenge accounts. So because I do have a day job, which I sit at my desk, I'm lucky to be able to trade while I work. So if I'm sitting at my desk and I see something that's like too good to pass up, which happened yesterday actually on NQ, there was a lunchtime move and I took it. And it was a reversal setup. But I took it on my challenge account because I want to follow my rules, which is I only want to take funded account trades in between 9:30 and 12. Anything outside of that, challenge account. That's what it's there for, right? And I know there's some crazy deals right now with Apex, which I don't think is really that good of a deal. I did the math on it today and I was like, it's still $189, all in. And that's if I pass it in the first month. Um, it doesn't seem like much of a deal to me when they're saying 70% off, but $40 lifetime PA. Usually and I mentioned this actually in another chat, but I was like, usually they offer 90% discounts, and then it's like $85 to $125 lifetime PA. So it's just like, are they gonna load it on the front end or the back end to get you, right? But I see a lot of people promoting this, and I just feel like, I don't know. Like I understand there's affiliate commission and things like that, but it's so misleading to people who aren't literally looking at the numbers carefully because they'll see it and go, "Oh my God, 70% off, $40 PA," and this trader that I really respect is promoting it. But meanwhile, it's like $189. So for me, not much of a deal. If I look at MFFU, I know there's a deal for $59 for a 50K account, $3,000 account, like basically your drawdown. To me, that seems like a great deal. Like the lowest you can go to get an account, go for it, and then use your system, your skills to trade. You don't have to just trade in between this time. You can trade outside of that time too. It's a challenge account, right? You need to secure a pass as fast as you can. So if you're doing like what Day Trading Realtor does with the one shot, one kill method, like you could do that, or you can just amp up your trade size, right? So like, maybe you're dividing your risk by, I don't know, by 5, right? So that's basically saying, okay, I can pass this in 5 trades, or it'll take 5 losses for me to blow the account, right? Something like that. Okay, triggers. Hard time frame PY, SSMT, liquidity sweep, change state delivery, the breaker block, the unicorn, and you'll also notice I wrote the 20 EMA. This is a final piece of confirmation for me what I might trade. And a big reason was that when I used to trade off of a limit order with the change state delivery, I'd often get front run. So now what I'm doing is I'm waiting for that 20 EMA to get broken, and then I market entry. Like I do a market order entry with my stop loss at the swing point. So what does that mean? Let's look at GC, okay? Because I talked about how GC had a setup today, but it did not have SSMT, but we'll still walk through the details of it, okay? So, starting from scratch on a blank chart, what do I do? Well, let's hit replay. Let's go back to, let's go here. So the first thing I do is I mark off my 4-hour levels, right? So there's a 4-hour level here. And I know I talked about midnight and 7:30, which we'll check out in just a second, but the levels still don't change. Sorry. Okay, so there's another H4 here. Okay, so I got 3 levels of interest. Now I know there's stuff up here, but I'm not going to worry about that. I'm just going to worry about these 3 because literally at the start of the morning, that's a pretty big move, right? Let's go to the hourly, see what we have here. Just double check the time. That's 5, 6, 7, 8, 9. 9. Okay, perfect. So if I go to the hourly now, and I'm looking at the levels to the left, I know that there's a level here. I know there's a level here. And I know that there is a level up here, right? I'm going to go to the 50-minute now to fine tune my levels, right? That's what I use the 50-minute for. So when I want to fine tune my levels, what does that mean? It means those levels I marked like H4 or H1, if those, like in this situation, that H4 level is the previous daily high, I'm going to actually change that now to previous daily high. The previous daily low is down here, which was an H4 level. I'm going to change that to previous daily low, right? It's not to say it's invalid. It's 100% valid. It's just I'm marking it off to give me more information about what that level represents. Okay, you'll notice this level here, H1 ERL, is the Asia low. So I'm going to mark that down as an Asia low. And this level up here, which I had marked as an H1 ERL on the top side there, that's actually a London high. So I'm going to mark that off. Okay, and that's it. And everything in between here, I'm not going to worry about. Now, I want to just share one thing of information with you. You see how 7:30 and midnight are tightly wound like this? So when this happens, this can be very, very troublesome if your levels are too close to one another, your higher time frame levels, right? Because at least for me, because then I'm not actively trading. Like I might not be executing inside of a proper discount or a proper premium. So how do I work my way around this? I'm going to show you a little tip. What I use is something called the dynamic EQ. Okay, what is a dynamic EQ? Well, basically, it's a daily range that I use to figure out where the EQ is. There could be indicators for this. I don't think there is, but I just manually do it. So I'm basically using the opening of the new day, which is 6 p.m. ET. And when I show up in the morning, I want to understand like the range. So I'm just going to mark the range from the lowest point to the highest point. And now I'm using Fibonacci here, okay? So if I use Fibonacci, let me just show you what I'm talking about. So I'm going to do this. I'll double click it just so you can see. All I have is the 0.5 pointed out here. And it's not using the log scale, so make sure you have that checked off because my chart's not set to log, it's set to linear. What that does now is it puts the daily EQ on my chart, and I'm going to lock it. So now I know, even though I know that I said that I will only take shorts above 7:30 midnight, I will only take longs below 7:30 midnight. But when they're this close together, like I could potentially still take a long underneath these levels, but still be technically inside of a premium, right? Because it's above this line. This is why I use the daily Q, because this just gives me added guidance to know, am I actually trading in the premium or in the discount of the daily range? So I like to have these aligned. So what that means now is I know that a lot of the noise here I don't have to worry about, right? I should just worry about this low here. That's it. Okay, so let's go to the 1 minute now. Now this is the lower time frame executions we talked about, right? So at market open, GC was above these two levels, it was inside of a premium, but then quickly sold off, right? So what am I looking for? Well, I was waiting for a key level to get tagged, which is the Asia low. So right here, the Asia low gets tagged. And I'm also making sure that it's happening inside of my manipulation window, which you already know it's right here, right? Post 9:30. So the second this gets tagged here, okay, this is now my point of interest. I'm on the 1 minute time frame. I'm looking to engage in this setup. I'm going to put up the SI fractal, and I'm looking for SSMT to form here. Okay, so if I don't see SSMT, I'm not going to take that trade, right? No matter what. So the way I'm utilizing SSMT now is I'm only going to look as far back as the previous 90-minute quarter, which is on display here. So if I don't see anything forming, I will not take the trade. I'll just study it and figure out what it's doing, right? But the key points to all this, that's just one part, right? We talked about hard time frame POI. That's our Asia low. Where's the liquidity sweep? Where's the change state delivery? Where's all the other stuff? Okay, let's talk about it. So if I'm looking at this chart, even though I know that there's no SSMT or SMT, I can still mark off key levels. So I know that there is a lower time frame liquidity sweep right here. I know that if this is going to be the valid low, that there's going to be a change of state delivery right here. Sorry, give me one sec. Okay. And now I can observe what's going to happen next, right? So is there a breaker block, right? Remember we talked about how the change of state delivery is a key component of the unicorn, and it is an order block, basically. Like some people would just use this whole thing as an order block because it's a series of candles. We can also see that there's a breaker block here, right? This is a breaker block, right? If it confirms with a closure above. The unicorn, of course, would confirm. Typically, you don't want to see consolidation like this. You'd rather see like a swift move higher, displacement with an FEG. That would then confirm the unicorn, right? But these are the concepts that are underlying the unicorn. So I'm going to wait and see what happens. Let's hit play. Okay, so we get like a mild closure above. There is an FEG, but does this look, even for a unicorn, I'm not sure this is something that even I would take for a unicorn just because of all this. It's not very clear. It can still work, of course, but it just depends on your filters, right? Like, what do you want to see? Do you want to see, like if you're trading a unicorn, do you want to see a sweep, a move higher, retest the breaker, and then go up like this? Or do you want to trade something like this, which is basically doing this? See the difference? Very different. What happens? Let's find out. Well, first off, what ends up happening is price goes even lower right here. Okay, so let's get rid of all this. Now, this is the example I wanted to really show. Okay, so this is Asia low. I'm going to get rid of Asia low. Actually, get rid of Asia low. Let's keep it on the chart. So the next window of opportunity for me would be right here. So now I'm looking for manipulation to occur here. Now, manipulation can front run. Okay, it can front run the window that I'm looking, and that's okay. All that means is I'm going to stick to my rules. I'm personally not going to take a trade. If someone else wants to do that, that's totally cool, right? It's just this is what I'm doing. So I'm going to hit play and see what happens. Okay, so what we can see now is let's identify what happened here. So first off, this was my window of opportunity, 1053 to 1138, right? At 1046, the sweep occurs at Asia low, and it occurs before the window of opportunity for me. Secondly, there was no SSMT, right? Everything was pretty correlated with SI and GC here, right? They're both doing the same thing. Okay. Let me just check one more thing. Okay. So the other thing I want to talk about in regards to levels, okay, and I'm trying not to make this too confusing. I'm going to delete Asia low. And the reason I'm going to delete Asia low is because it was already mitigated at 930. So usually what I do when that happens is I'll delete that line and I'll wait to see if another ERL forms. Now, what does that look like? Well, I'm basically looking for, it could be an hourly point of interest. It could be a 50-minute point of interest, right? In this situation, there's a 50-minute level here to consider right there, right? So you have a swing low, internal swing high, lower low, higher low. So I have clear 15-minute institutional levels. So I'm just going to mark this off as a 15-minute level. Now, I personally wouldn't take the 15-minute level. I'm moving more towards just strictly using H4 and 1 hour levels, but there is a 50-minute level here. I have used 50-minute levels for a long time, but sometimes it might put you into more trades and then you just get cooked. Whereas if you just use a higher time frame level, it's more accurate in terms of like understanding the value of what it represents. So 15-minute level gets tagged. There's no SSMT. It front runs my trading window. Okay, so let's get rid of this for a sec. let's just say this was a good trade and this fit inside of my window and there was SSMT. How am I trading this? What are those lower time frame execution triggers, right? So we know that there's a higher time frame POI, which is our 50-minute swing point. There's no SSMT in this case. Where's the liquidity sweep? Okay, let's look at the liquidity sweep. So if I'm looking for a lower time frame liquidity sweep, it's literally right here, right? This is the sweep. No different than if you were looking for a unicorn setup, right? Because if you're looking for a unicorn setup, you want to sweep, you want to find the breaker block, right, which is right here. Stretch this out. And then we obviously want to see, if you're trading a unicorn, you want to see that there is a FVG inside of the breaker block, right, which we get right here. So there's your FVG inside the breaker block. Now you notice the difference with this unicorn compared to what was happening to the left here? See the difference? This one is doing straight move like this. This is what you could deem as being an A+ setup, right? So things that I'm looking for are change of state delivery, which is right here. So here's the lowest candle, and I'm looking for the highest series of bearish candlesticks. And that's my change of state delivery, right? And it's inside the breaker block. So I want price to close above the change of state delivery. Let's go back to the sheet. I've identified that there's a breaker block. I've identified that there's a potential unicorn. Now, where does the 20 EMA come into play here? Well, if I tag this on, here's my EMA trend. So this cloud is basically the 20 and the 50. Okay, so I'm utilizing, I mean, you can utilize just the EMAs themselves. I'm just personally using this. The bottom line here represents the 20. The top line here represents the 50. So the second, for me, when price closes above the change state delivery, and then finally I get a closure above the EMA, this is where my market entry would be. So right at this candle here, and then my stop loss would be at the low, and I would literally just aim for 2R. Now we obviously got to know that liquidity, like there has to always be a draw on liquidity. We already know this, right? This is something Ash talks about all the time. So far says you got cooked on this move, I'm assuming. Did you enter here? I'm not sure if you decided to enter here or not. Let's go back up. Now, one of the key things with draws on liquidity are session highs and lows. And look at where price goes. Straight for the London high. And I know this is textbook because it happens all the time, right? We try to enter at the extreme of the range. What's the extreme of the range? Well, Asia lows right here, and then a 15-minute ERL gets created, but it's still basically Asia low. And where does price go after Asia low? It goes to London high. So the draw on liquidity was always there. The question, once again, I come back to it, is if a trade doesn't fit your rules, even by one or two things, you have to ask yourself if you're going to FOMO in or if you're not going to FOMO in. Because you risk the possibility of taking a stop loss and knowing exactly why you took the stop loss, or you get lucky, right? So if I had broken my rules, so rule number one was that this occurred outside or front run the window that I was looking for the manipulation to occur in. Number two was that there was no SSMT, right? So I would have broken two rules to take this trade, and sure, I watched this thing go up, but it's not where I wanted to take the trade, right? For me, my A+ is when both of those criteria are also included. So that's the GC setup, showing you the lower time frame triggers, showing you how I was analyzing GC and how it, while it did go to the draw on liquidity, it didn't fit my trade. And I stayed out on a Friday. And this was a big move, right? Like if I was to show you all the way up here, like that's, 3R move right there. Did anyone catch GC today? I'm just curious. Because like if you're trading just the unicorn, then there's a good chance you might have caught this, right? So results. Well, just like I showed you, no trading model or system is foolproof, right? Nothing is going to guarantee 100% win rate. It's impossible. Not going to happen. Okay? My goal as a trader is to try to get between 50 and 60% win rate per month. That's my target. Why is it my target? Because when I was trading, actually, let me put it this way. So if I'm aiming for 2R, okay? If I'm aiming for 2R, what that means is I only need 33% win rate to be break even, I believe. Now, that's break even. Obviously, you want to be profitable, right? So let's just say, I'm trading a different system that gets me 45 to 50% win rate. I now know that's profitable, right? But here's the problem I faced. Maybe you will face this. You have faced this too, or maybe you didn't realize you faced this too. But for me, here's the problem. I cannot lose 50 to 55 to 60% of the time of my trades. Why? Because psychologically, it has an impact on me as a trader. I can't be losing that many times because I could lose a bunch of times in a row. And what that does is it makes me doubt what I'm doing. So for me, putting myself in a situation that I can achieve 50 to 60% win rate with less trades is much better for my psychology and my mindset, because now I'm only losing, 40 to 45% of the time. And that's a huge difference. It might not seem like it, but it's a huge difference. Okay. Now, being grateful or greedy. Are you grateful that you got 2R, or are you greedy and you're going to say, well, I'm going to just go for more? I can't answer this question for you, and I'm not judging you if you are falling in this greedy category. I'm not judging you because there's a process involved with skimming profits along the way. And like if you hit 2R, you take 75% off, have a runner 25%. Like that's 100% possible. So like I said, I'm not holding judgment. That's a solid move if you know what you're doing and you can do it. I'm personally just aiming for 2R. And I'm aiming for 2R across, a handful of funded accounts because I don't need the stress that it might give me by holding on to things and having to manage trades that much. That's a personal preference. You have to figure out what works best for you. My invalidation is a stop loss at the point of invalidation, which is basically the swing point, right? Reducing market exposure. Well, ultimately, this is going to fall, like we talked about at the beginning, based off of time. The more time that you expose yourself to the market, the more risk you take on, versus the less time you expose to your market, the less risk you take. Trade quantities per day. Some people have X amount of trades that they can take in a day. Like they'll say, I only trade one trade a day, win or lose. Others will just trade whatever the day gives them based off their model, right? So for someone like myself, because I'm only trading these two windows, I know that if I was to even just look at one asset, like I could take two trades in one day off of the same asset. It's possible. If I'm watching three assets, that means 2 times 3 is 6. So that means I could technically take up to 6 trades in a day. So that then leads to the next question of what is the risk amount dollar-wise that I'm willing to risk in a day? What that means is, let's just say my risk factor is that I'm willing to risk up to, I don't know, let's just say $600 per day. So if I know that the max trades that I could take in a day are 6, what I'm going to do is I'm just going to split this by 6, right? So that means that I'm risking $100 per trade. That's just one example. Now let's just say I already know there's no way I'm ever going to take 6 trades because when I look at my journal, the max I've ever had was 3 or 4. Okay, so let's just divide that by 4. So what that means now is that instead of using, oops, where do my numbers go? Okay, so instead of using $100, I'm going to divide that by 4. That's $150 per trade now. Let's just say it's 3. Well, I'm going to reduce my risk now to $200. Or I'm going to increase my risk to $200 because I'm only going to take 3 trades max per day. But by understanding this concept, this is going to help you significantly when you are trying to trade, because in real time, trying to decide what your risk limit is going to be dollar-wise, and I've seen this happen to a lot of people, I've seen this happen even to myself. This is why I'm talking about it. I will look at a setup and it might look so amazing. Like it looks too good to be true. Like it's perfect. And I already took a loss of $100, or let's say I took a loss of $200. And then I start getting the greedy mindset, or the greedy kind of talking in my head, the voice in my head saying, you need to risk more. Make back that loss and get 2R. And this is where the problems start potentially snowballing. Because could you be lucky and get the win? Yes. And if you ever do that and you get the win, it's actually training you for future bad behavior because you will get humbled by the market at some point. And I only speak of this from experience. And I'm just reading now. Da Vinci said the same thing. So I'm not the only one. And I'm just a trader just like anyone else here. So manage your risk means every single trade you take should be roughly about the same amount of value, right? Now, when we're trading futures and the contracts, are static in terms of the value amount per point, the problem is when your stop loss on one setup is different than the stop loss in another setup, right? That then makes you have to adjust how many futures contracts you'll use to trade. And it won't exactly equal, let's say, $200, right? It might be $175 or it might be $190. It's up to you now to decide what that part looks like, right? So for me, if I'm risking $600 in a day, that's the most I'm willing to lose. And I know that I could take up to 3 trades a day. That means I'm willing to trade $200 per trade. That's 3 chances, right? And let's say now I set my chart up and then I look at the futures contract. I'm trying to figure out the size, right? How many contracts am I going to use? Let's say, one of one of the trades, when I put in the X amount of contracts, it takes me to 150. But the next one I put on takes me like a little above 200, right? These are decisions you gotta figure out. Like, are you going to take the contract size that equals $150, or are you going to take the contract size that equals like $215, right? Those are little things you're going to have to figure out on the fly and know before you even see the trade set up. Because once your emotions get involved, that's when huge problems start happening. So Mika says, it sucks when props have strict contract limits. They don't offer 1 to 10 mini to microscaling, and then you're forced to risk either less than you want or more. And of course, when you go for less, you'll see that's the one to smash TP. 100%. And this is kind of what I'm talking about with the conditioning, right? When you start seeing this, and then you're like, I'll risk more to make up a little bit of that difference. And then sure enough, you hit stop loss. And then the trade that you don't go for, or the trade that you take with the less amount, obviously will go like, 6R, go gangbusters. Like it's Murphy's Law, right? That's how it goes. But remember, don't let your emotions get involved. Just stick to rules. Write them down. Put them on a Notion spreadsheet. I don't care how you have to do it. You do it because it's going to keep you safe and keep you from blowing your account. We all have that voice talking to us while we trade. But the most successful traders that we see are somehow able to work through that because they're just human like us. They will have those voices too. But what are they doing to hack that and not succumb to that emotional pressure? That's the difference, right? You have to figure out what they're doing that I'm not doing. Like what are they doing that I'm not doing? And a lot of the times it's literally having extremely strict disciplined rules that if X, 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 or X, Y, and Z, or A, B, and C are present and visible on my criteria, that's what I just take it like a robot, then they do. If C is not there in the ABC criteria, they don't take the trade. It's as simple as that. They live to see another day. There's always another trade around the corner. Never forget that. So today, when I saw this trade play out, I remembered there's always another trade around the corner. We just started the month. It's Friday, November the 7th. There's still many more trading days to go, many more opportunities to take a trade. Okay? Just want to say thank you to all of you for being here today. For anyone listening to this on the replay, I really appreciate you as well. I appreciate your time, appreciate everyone's time. The stream is not over just yet, but my presentation is pretty much over. So if you have questions, feel free to drop them in the chat. Nate, if you got anything to say, feel free to drop it. I do want to say, oh, sorry, go for it, man.
I was just gonna chime in and say, thank you for, going over all
Welcome,
your
man.
information and taking the time to provide this for the community. Obviously, a lot of people couldn't make it and wanted to have it recorded so they can watch it later. So, there was a lot of interest in you doing this. So I wanted to at least just jump in and say thank you. I'm sure, on behalf of everybody in chat and on behalf of the team that, everything that you provide is incredible information and very detail oriented. And the fact that you threw together the presentation for everybody just so everybody could have like a visual of while they were or I'm sorry, while you were speaking to them and everything. I mean, you always go above and beyond. So just wanted to say thank
Thanks,
you
man.
for coming on here and doing this.
Cheers, man. I appreciate that. Appreciate that. Thank you. I guess I'll just showcase the loss I took today. I don't think I showed the loss today. I posted it in the premium side, but I did not share it in. I didn't share it in the public side. All my trades are documented inside the premium. I have a thread inside my channel where I'm just posting everything there. But essentially, the loss I believe was 1008. Is it up here? Let's turn on the SSMT because that's what was driving my decision making. And let's go to this. Sorry, bear with me for a sec while I just look for it. Sorry, bear with me, please. Let me show you. EMA settings. So it's just the 20 and the 50. I'll show you which one I use. So EMA Cloud 150, 250. Just snap that on your chart, and then all you have to do is go to the settings and just adjust the presets to this, and then adjust your colors. Like I like mine to be gray, like I said, and it will look like this. Simple. Okay, let me go back to this, show you the loss. Now, this is the difference between looking for higher time frame levels to trade with or 15-minute levels, which are lower time frame. Okay, this is the difference I talked about, that when utilizing 15-minute levels, you do open yourself up to more losses. And that's what I found for myself. Okay, I'm slowly moving towards not using them anymore. It's just I'm trying to find less is more approaches versus trying to always be in on a trade no matter what. Okay, so 923 to 10, so it would have been yeah, this one right here. Okay, so first off, here's our window. Oops, put that back up. Try to go through this quickly. Right, here's the window. Wait, I'm utilizing the wrong time here. I think this is the wrong day. Rookie mistake. Okay, let's try this again. Okay, that looks way better. Much better. Okay, here we go. Okay, so we're inside of the time window, the quarterly theory, micro 2, micro 3, perfect. We're at an H1 ERL, perfect. We are below midnight and 7:30, awesome. And then I believe in terms of the daily range, we're also in discount, so that was perfect. I did mark these levels off actually in the public side. I shared a chart earlier in the morning about levels I was looking for. This was one of those levels I was looking for. So this level gets tagged inside the window, but now I need to see a liquidity sweep, right? So we get that right here. I'll mark it off like this. Right, there's our sweep. Okay, then I'm looking for SSMT. So if I put up the fractals on the chart, I can start to understand where the SMT is. So the whole day it was correlated. ES fully correlated. So I then will check YM, see what YM has for me. And what I started to see was YM had a cracking correlation. And you'll see it right here, right? So like this to here, right? So what do I do in terms of my entry when I see these things forming, right? These are my criteria: higher time frame POI, SSMT, lower time frame liquidity sweep. The next step is change in state of delivery, which we get confirmation right here. Now you'll notice this is not a unicorn, right? If this was a unicorn, we'd be utilizing a breaker block way up here, right? That would have been the breaker block. So when price started to rip higher, we would have wanted to see displacement through here, right? Which we don't get. So if you're trading a unicorn, there's no trade here for you. But for me, I'm trying to enter before the unicorn confirms. So once I get the change state delivery confirmed, I'm looking to see if price will break above the 20 EMA. The second that happens, my fingers on the trigger with a market entry, and I'm aiming for 2R, right? I'm aiming for the highs up here, all this liquidity here, right? That's all I'm looking for. However, like I said, no trading model or system is foolproof. My goal is to try to get 50 to 60% win rate. That means I'm going to lose 40 to 50% of the time. I already know this. So today, I just want to show you, here's a loss. Here's an example of a loss. Okay? This happens. If I go to Twitter, I can show you what I did yesterday. Let me just quickly put that up, and I'll show you the win. Whoops. Give me one sec. I'll put this up. Okay, paste it. So right here is the win. I'm not haven't showed the SSMT, but it was there. But the same principles, okay? Liquidity sweep at a hard time frame POI. Now in this case, I used the 50-minute ERL. It was during lunchtime, but look at where the sweep happens inside of the window, right? Change delivery gets confirmed. I'm looking for a price to break above the 20 EMA, and then I'm looking to enter. Now I entered it slightly late, but I did catch it. So this would have been my entry right here. Aim for 2R. Trade's done. And that's it. That's literally all I was doing. And yesterday price was just absolutely dumping. So utilizing things like SSMT increases my odds or my probability to catch that reversal, because as we know, SSMT shows us that there's a cracking correlation. And that cracking correlation typically means that there is a potential for a reversal to take place, a change in trend. That's all I needed to hear to know that I should be going all in on SSMT. So that was a winning trade and a losing trade. And we showed a trade earlier today about how sticking to the rules, how I do it, kept me out of this trade, which was a winner. But I can tell you just from my journal that this has also helped me to stay out of losers as well. Okay. So it works both ways. And today is just an example of one where it was a winner. So yeah, there we go. If anyone else has any questions, feel free to drop in the chat. Otherwise, we can wrap this up. And I appreciate everybody's time once again. If you don't know, I'm on Twitter, TraderXKira. Follow me there. I'm also inside the obviously this Discord, so I'm here. I'm trying to be more active and engage more for sure. And then also I'm inside of the premium side too. So I post a lot more charts there. I got session rewind videos which I've started recently. So days I'm not actually live streaming, I will make like 10-15 minute videos, just kind of walk. Basically, a lot of things I've shared right now, I basically put in a 15-minute video, 10-15 minute video, and just literally discuss the trade itself or the setup. And yeah, I do have a YouTube. Believe me, I don't even know what my YouTube address is though. I don't think I have. I've just started it, to be honest with you. I wasn't even planning on doing it, but then I thought, oh, I'll make some videos for the premium side because I appreciate everybody. Let me see what my channel is. View the channel. Okay, so it's just youtube.com/try at TraderXKira and my channel there. But I got nothing up there right now for the public side of things. Everything's privatized. So I'll eventually start maybe posting some stuff and doing some stuff there. But like I said, I'm not out to sell anything, so I don't really need to put a YouTube video out and go through all that stuff. I just would rather, truthfully, just do like live streams like this and hang out, talk shop, and keep it real. So, yeah. Thanks, so for Jen, appreciate it. Thanks, Bobby. Thanks, Dylan. Have a good one. F-Bond, peace out. Da Vinci, peace out. Mika, thank you so much. Remember, everybody, follow Mika. Not sure if Mika's got Twitter, but dude, you should drop it if you got Twitter, man. Actually,
Everybody go follow Kira on all of his socials. Everybody add him as a friend. Spam his Discord friends, or maybe don't
oh,
do that,
thank you.
but definitely be sure to show some love in the Discord whenever he's around, or show some love in the chat right now if you're still here tuned in, or follow him on all the socials. Definitely also shout out to Mika. Mika is going to be taking, he's going to be taking a whole new journey in his life relatively soon. Like you mentioned earlier, he's going to be leaving his job that he's currently at and starting a whole new journey. So that'll be exciting to see once he's doing that full time. I believe it is at the end of this month he will be starting his new journey into trading full time and while working a part time job versus a full time job. So shout out to Mika and shout out to everybody that stuck around to listen to everything that Kira had to say. I mean, this man just provided like an hour and a half to an hour and 45, almost 2 hours of content for everybody and information for everybody. So clearly he has a lot to offer everybody in the community. So once again, go follow him on Twitter. You can follow him on Instagram. He's mostly active on Twitter, so that's where I would suggest if you're looking to really kind of dive deep into what he's got going on, you should follow him on Twitter. Also, like he said, he's also posting a ton of stuff in the premium community, as well as now he's looking to post more stuff over here. So everybody be sure to follow him on every social media platform. And you should also start posting stuff on the YouTube as well. Why not? There's no reason to not start throwing things up on there. We'd be happy to promote you on the YouTube as well.
Nice. Appreciate the warm words, man. And yeah, thank you so much. Yeah, just going back through the chat. Tracy, thank you so much. Dylan, thank you. Yeah. And Nate, thank you, man. Big ups. You're going to probably be starting up your own account too, I think now, right? Now that you're catching 2 Rs.
Yeah, we'll see. I mean, everybody has been telling me I should start, but I am the type of person that likes to lay low. But I mean, I am posting in my personal thread all of my trades and all of my session reviews. Although they aren't as detailed as what you're putting out there. It's just my journaling. So hopefully it's helping somebody out. But yeah, we'll see. I don't know. Maybe in due time.
Yep. I'm going to put out a recommendation here. Student stage with Mika, man.
Ooh, yeah,
Do it.
especially once he's full time, right? Yeah.
Yeah, student stage with Mika. We haven't had one in a while.
I know the last one we had was I mean, it wasn't really a student stage, but the last thing we had was Grace, what was her name?
Yep. Yield and Grace.
Yield and
Yield and
Grace,
Grace.
who
Yep.
did her last one. And now,
Mhm.
yeah, before then it's been quite a long time. I think Chicken was
Yeah.
the last one before that.
It sure was. Yeah. So, but yeah, I would recommend Mika, man. Lots of value he's providing, and he's part of the team. So, only seems right, man.
Something to think about, Mika.
Yeah. Yeah.
You might be
No pressure.
next.
No pressure, man. No pressure. No pressure.
Open to it. All
Solid.
right, sounds
There you
good.
go. There you go. We got a taker. All right, everybody. Peace out. So for Jen, peace out. Nate, thank you again, man. Have a
Of
good one,
course.
guys.
All right, everybody. Have a good weekend.